Hey everyone, welcome and welcome back to my channel once again. This is your friend Vishek, but not a financial advisor. And in today's video, first of all, we are going to talk about what is happening with the stock market. S&P 500 is sitting at its all-time highs. All the indices are skyrocketing. We will discuss the strategy if it's the right time to sell all of your position and then sit on a big chunk of cash like Warren Buffett did, or just keep dollar cost averaging up your positions, or just don't invest anymore and just keep holding your positions. Don't do any SIPs or don't put any lump sum amount anymore and just keep holding your position. So what would be the best strategy in my personal opinion? We will discuss that as well. And in the second half of the video, we'll discuss about one high growth stock which you probably haven't heard about on any of the YouTube channels, as this stock was down by 20% on an intraday level. So is it the right time to buy this stock or enter in the position? Or if you already have bought this stock, then what should we do with this stock since it was down pretty significantly? Because investors were expecting that this would 10x. So we will talk about all of these things. We will dig deeper into this particular high growth stock as well. So stay tuned until the end of the video because I will give you my personal analysis and we will dig deeper into this high growth stock for the year 2025. So without further ado, let's get right into it. Okay guys, so first thing first, to know what is happening in the market, we need to know what our investors thinking about the stock market. And the fear and the greed index shows us that there is an extreme greed, in the stock market, which tells us that investors are willing to pay high premiums now for all the stocks which they have been waiting for. Okay, so this historical chart of the annual percentage change in the S&P 500 index tells us a lot of things. So first thing first, you might be seeing these red bars in the negative side. Those means that we have seen a negative return on the S&P 500. 2008, the bubble, then 2002, market crash. All these were those big market crashes, and we can see that in those market crashes, even 47% in 1931 was the return from S&P 500. But this is nothing to worry about, because if you're investing into stock market just for 2 or 3 years, then this could happen, because you can see that 1, 2, 3 years there were only negative returns, but then the market picked up. Okay, so if you see the bigger story, we can see right here that overall the market has been going upwards, always upwards. So now, like I mentioned, is it the right time to invest into stock market when it is sitting at its all-time highs in July 2025? The short answer will be yes. So of course, I'm not putting a bigger chunk of my cash position into the stock market right now. I am sitting on a bigger pile of cash right now, but that doesn't mean that I have stopped investing altogether. No, there are still a lot of stocks in the stock market which are still giving us a much better value than many others which are overvalued, of course. Now, but in general, if for those people who don't want to cherry pick stocks, they have families, they have other priorities, and they don't really have time to cherry pick individual stocks and are just investing into indices, what my recommendation would be, it's not a financial advice, but what I have been telling to my community is that yes, you can reduce your monthly investments, but don't stop. Because if you would have stopped right here when the market was at its all-time highs and you're waiting for the perfect bottom, which you could not have guessed, you would have missed this return right here, right? And then you will be investing at again higher positions because of FOMO, and then the market is going down, then you are just reducing your positions or not investing at all. The market says, even if the statistical analysis says that even if you miss the best 10 days of investments in the last 10 years, you would have missed a 2x opportunity on your investment. So don't try to time the market, guys. The P ratio for S&P 500 is currently at 25-26, which is pretty high, to be honest. Yes, I do agree with that. But still, if you're trying to time the market, don't do that. Of course, if you do have time to search on individual stocks, then I would say yes, for the S&P 500 index, maybe you can reduce your SIP, your monthly investment plan, and then put more money into those undervalued stocks. But if you don't have a portfolio with your individual stocks, then don't stop investing. Maybe just reduce your monthly investments plan, and then save some more cash. If the market corrects by 5 to 10%, then start your investment plan again. So these are the strategies which we discuss in our Patreons, in our community group. And if you would like to join as well, then you will find the link in the description below. We do all these discussions, and there is no rocket science, guys. There is really no rocket science to build wealth. These are just small tips and tricks. But of course, if you just want to, not follow all these Patreon communities or other YouTubers, then just the simple strategy is keep investing. Just go on. You don't even have to reduce your money. If you don't even want to look at all these things, you don't have to reduce your SIPs. Just keep on investing, and that's it. That's the I would say that's the bread and butter for building wealth. Okay, now with that being said, now you know about the stock market situation. Now let's jump on to our high growth stock, which you might not have heard about. Yes, so the stock which we are going to talk about today is BlackSky Technology. Yes, the ticker is BKSY. And now why I'm talking about this stock, because this dropped by 16% on intraday level. I'm recording this video on 20th of July, and it was up by 1% after hours, but I don't think it will jump more than that. So there is a significant opportunity if you guys would like to jump in. But before that, please watch the full video because my analysis is a bit different. Okay. Anyways, so the market cap is 740 million, so it's a penny stock, we would say. And the volume was pretty significant on the selling side, 10 million, yeah. And the days range was 21. Now the price target, the 1 year price target is $18, and there is a reason for that. Okay, so why the stock dropped? First of all, let's talk about why this stock dropped. The stock actually dropped because they're hoping to raise some cash. So they will issue worth $125 million convertible debt, and potentially as much as $143 million. And this is a huge deal for the investors. Why? First of all, convertible debt is not that bad here, right here, because they are trying to pay off their previous debt, which was at a much higher interest rate. This convertible debt, which they are getting, would be at 8% interest rate, and which will recover, or which will help them to pay off their high interest previous debt rate, which was at 11 to 12%. So this is a good reason, but the investors are afraid that they might not have enough cash in the coming year. And that's why that will result into, yes, dilution. This is the fear why investors were quite worried about, and there was a huge sell-off on last Friday. So when the news came out, the investors were pretty damned astonished that why they are doing that when they have quite a decent cash position, but they are now being afraid that they might use the cash position in a different way, and this might result in more dilution. Okay, so like I said, many of you might not even have heard about this particular company. So first thing first, let's talk about what this company actually does so that you guys are at the same page like me. Okay, so BlackSky Technology is a space-based intelligence company which engages in the business of delivering real-time images, analytics, and high-frequency monitoring of most critical and strategic locations, economic sites, and events. The company is headquartered in Hendron, Virginia, and currently employing 340 full-time employees. The company went IPO in 2019, yeah, so 6 years old. The firm delivers on-demand high-frequency images, monitoring, and analytics of strategic locations, economic assets, and events in the world. And the company designs, owns, and operates low Earth orbit small satellite constellations. And BlackSky Spectra platform processes data from its constellation and from other third-party sensors to develop the critical insights and analytics for their customers. So it could be government contracts for the militaries as well. Yeah. So with this, you have an idea what they actually do. Okay. Now let's jump on to their earnings report to have a more in-depth knowledge of what this company is doing and how they're performing. Okay. So as you can see, these are some active base intelligence images from them, and these are some real-time insights, what you can see, and emerging events. So as you can see as well from here. Now, recent highlights. They have been awarded with worth $130 million new contracts, and they also got renewed agreements from the Q1. Strong bookings quarter leads to 50% year-over-year growth. Yeah, and they have a backlog of $366 million as well. And the Q1 revenue growth was in double digits, 22%, which is quite good. Not a bad thing. Now, the most important thing for this company is their first generation 3 satellite. So just to tell you guys the difference between the generation 2 satellite, what they have. Now generation 3 satellite gives us a much better high resolution images, which is more important for the AI engine which they are using. Yeah. And this creates a much bigger libraries for the classification of those images. So basically with the high resolution, the AI engine performs better. And that's why now they're introducing this Gen 3 satellites, which has much better, wider library of the aircraft engine, vehicles, and many other things, which could be a much more beneficial thing for the governments. Okay, so this is what they are doing with the Gen 3. So now you know what Gen 3 satellites are. So for the first Gen 3 satellite, fully commissioned and exceeding performance expectations. And second, very high resolution, like I said, Gen 3 satellite being shipped and on track for Q2 launch. So this could be a big breakthrough for them. They have an increased backlog. Q1 backlog increases to $366 million, which is nearly 50% upside. And they also have the backlogs for Q1. Okay, so this could be a good revenue growth driver for them. Now, they also have the automated AI-powered intelligence, which of course require their satellite communication. And now, like I said, they are beginning the launch of their Gen 3. So second Gen 3 satellite is being already shipped and is on track to launch in Q2. And they are expecting to have 8 Gen 3 satellites on orbit by early 2026. Now, sooner or later, there will be so many satellites in the space. This is something which I honestly don't like. Yeah, like who knows? Maybe one of the satellites just gets destroyed and falls on your head. No, it's a bit crazy in my opinion. Anyways. So as you can see, very high resolution, high frequency monitoring and AI-driven analytics unlocks new applications, and this is only possible with Gen 3. So this is something which they are looking for and the governments are also looking for. So this is what they are doing. Now let's jump onto their financial results because this will tell us the performance. So the Q1 revenue was at $29.5 million. Like I said, double digits. It's not a bad thing at all. Now, the majority of their revenue was coming from actually their engineering services revenues, which jumped from $6.4 million to $12.7 million. That was 100% upside for their service revenue. But if this could be happening, if this could be recurring, especially their professional and engineering services revenue, which is more of a services revenue, then they might have a really big runway for their top line growth, really. So this could be huge. Now, Q1 adjusted imagery and analytics cost of sales. So of course, their cost of sales as well, which increased from 3.4 to $3.8 million, which is not that big. So just an increment of $0.4 million, whereas the sales grew by 100%. So this is quite amazing in my opinion, amazing really. And the adjusted EBITDA was not that impressive to be honest. So it was positive in the Q1, but in Q1 2025, it's negative 0.6. And they say that mainly because of the R&D and the money spent for the Gen 3 satellites, okay? Now, cash liquidity, this is the concern for the investors, what they are seeing. So the cash position is of course grown by 51%, but how the cash is being generated by the company is, or we already saw, is via convertible debt or the previous debt which they had. And what the investors fear about is dilution, which I hope doesn't happen. But anyways, let's get on to that in a moment. Now, at the front of new era in space building intelligence, first Gen 3 satellites fully operational and exceeding performance expectations. We already saw that. They already have contracts. They even have backlogs worth $338 million. Receiving positive customer responses on initial Gen 3 imageries. Yes, of course, images are quite important for AI as well. Delivering high efficient and cost-effective space and software solutions. Gen 3 constellation is setting the stage for Black Sky's next phase of growth into 2026. So they are projecting a huge growth in 2026. So they're expecting an positive EPS of $1.5, which is impressive to be honest, from negative $0.6. Okay, so now you guys have an idea about this company Black Sky Technologies, what they are doing and how they are performing. Now let's talk a bit more about their performances, so you guys have a picture in your mind. So this picture tells us a bit more about their performance. Okay, so this is the trailing 12-month period chart, and you can see that the green bar is the total revenue, the orange represents the operating expenses, and the blue is cash from operating activities, which is an important metric if you are a value investor. So we can see right here that their revenue was quite amazingly increasing until 2023, but after 2023 it became a bit stagnant. And apart from that, their operating expenses did not reduce at all. So their revenue was stagnant, but their operating expenses were still the same, which is a red flag for me. And the cash flow from operating activities were still in negative. But now in 2025, first time they became positive from their cash flow from operating activities. Now this is in the trailing 12-month period. We still have to see how they will be performing for the whole year, and they already projected that in 2026 they will be having an EPS of $1.5. But we still have to see that, okay? So this is the only green flag right now which I see, that okay, their revenue is a bit higher than the previous trailing 12-month period, but it's still the same almost 2024 quarter 4. So it was around $107 million and still $107 million. So not a big jump for me, which I would like to see. And if we see year over year, we can see that, yeah, it's nothing much, okay? And quarter over quarter, we can see that, okay, they have a good quarter, not based on the sales, but based on the cash flow from operating activities. So for me, okay, they don't grow, would be okay. But for such a small company, I would like to see a huge revenue growth, yeah, because they are not Tesla, they are not Microsoft, where you can't see a revenue growth in double digits. Here, I would like to see revenue growth like 40 to 50% even, because they are just a $700 million company and the TAM is around $20 to $30 billion. So I don't want to see this revenue stagnance in the initial years since 2019. Okay, they became public in just 2019. So this is a red flag for me. Yes, a green flag is that they are now generating cash from operating activities. But for me, this doesn't matter. If the company is in growth phase, I would not have any problems if the company was not generating any cash flow from their operating activities, because if they would be putting more money into their R&D, SG expenses, marketing, I would say, okay, they are in the growth phase, they have to grow, bring on the cash, and even if they have to finance it from outside, I would have no problems at all if they were still generating a huge revenue growth. So if they were having a good top line growth, I would not have any problems if they were a loss-making company. For a startup, it's okay, really okay. But here I see they are not generating any revenue. I mean, they're not increasing their revenue. Now let's see how the company performs in 2025 and 2026. They promise, but they also promise in the previous years. So I'm not that amazed by that. Now, the last thing which I would like to cover in this video, which tells us, is this stock, is Black Sky a good buy right now when the stock got corrected by 16% on an intraday level? So their EPS estimations by the analyst is around 1.46 on the higher side until 2029, $1.46, okay? Now they are projecting already $1 they are projecting in the year 2026. So that means just a growth of 50% more in next 3 years. So $1.46 they are projecting an EPS. So now let's take this EPS estimate and let's multiply it by PE of 30. So we get a price target of $45. Now this is when they are trading at a PE of 30. The company is not growing at 30% year over year. So giving a 30 price to earnings ratio would be not justified in my personal opinion. I would say 1.5 times 20 would be a justified price target. Okay, so $30 is our price target. Now the company is trading at $23 already. So in my personal opinion, this is not that of a good deal. Okay, the company is not growing as what we expect year over year. It should be growing by 30 to 40%. Quarter over quarter, we saw that it's growing by 22%, but just quarterly earnings. But we saw yearly performance is not that great, to be honest. So in my personal opinion, this correction of 16% was good. Because then I would have said it's way overvalued. I would not have entered anyways. But now it is down by 16%. But still, I wouldn't say that it's a good company to buy at this price, to be honest. So what could be the strategy for those who are interested in this company? Well, so if this company comes back to these levels like $12 or so, then I would say, yes, we have a 2x to 3x potential. Yes, then I would definitely be interested in Black Sky, in this high growth stock, penny stock, I would say. But now at $23, nah, I'm out. So I wouldn't recommend this to my community as well. So of course, this is not a financial advice. This is a research which I'm giving to you guys. And of course, you can make your own best decision based on this information which I'm giving to you guys. So this is the conclusion. This is my analysis for this high growth stock for the year 2025, Black Sky Technologies. And that's it, guys. If you would like to know more about such companies, you can watch this video right here. And I will see you in the next one. Please subscribe, guys. Please like this video. I would really appreciate that. Until then, stay safe, stay healthy, and ciao.